Today, we're cracking open the blueprint for one of the most ambitious regulatory projects on the entire planet. The European Union is completely rebuilding its rulebook for money. They're constructing from the ground up a massive digital fortress for the modern financial world.
So, you gotta ask the obvious question, right? Why? Why go through this massive overhaul right now? What was so broken about the old system that they had to tear it all down and start over?
Well, the old system was basically cracking under pressure from three directions at once. First, you had this ridiculously fragmented system. 27 countries meant 27 different sets of rules, which created all these loopholes that criminals just love to exploit. Second, technology. We're talking fintech, crypto, you name it, was just moving way too fast for the law to keep up. And third, the threats themselves changed. Fraudsters weren't just trying to steal your password anymore. They were getting super sophisticated, using social engineering to trick you into sending them your money yourself. The old walls were basically crumbling.
So the EU's answer to all this chaos was, in a way, radically simple. Forget the 27 different rulebooks. Let's create one single, powerful, and harmonized rulebook for everybody.
And to really get what they did, you need to understand this one critical shift. The old way of doing things used something called directives. You can think of it like telling every country, hey, please bake a cake. What you got back was 27 completely different cakes. The new way uses regulations. This is like handing everyone the exact same recipe, the same ingredients, even the same oven temperature. Now everyone makes the exact same, consistent, and most importantly, secure cake. That shift is the heart of this entire project.
Alright, so with that single recipe in hand, the EU got to work building its digital fortress. And we're not just talking about one big wall. We're talking about a series of interlocking defenses, all designed to work together.
And here's the blueprint. It's all built on 4 interlocking pillars. You've got the foundation, making sure the entire system can take a hit. You've got the gatehouse, securing every single payment. Then you have the watchtowers, to hunt for financial crime across the entire block. And finally, a plan for the new territory, to finally tame the Wild West of crypto.
So here are their official names. The foundation is DORA, for cyber resilience. The gatehouse is the PSR, for secure payments. The watchtowers are AMLR, to fight money laundering, and that new territory is governed by MiCA, for crypto. Let's dig into what each one actually does.
Let's start with the foundation, DORA. To understand this, you need to know a kind of terrifying truth that regulators woke up to. The entire financial system in the EU, we're talking banks, payment apps, exchanges, everything, is now completely dependent on just a handful of big tech companies for critical stuff like cloud computing.
And here's the absolute game changer. For the first time ever, DORA gives financial regulators the power to directly supervise these huge tech companies. Think about that. A financial regulator can now walk into the offices of Microsoft or Google Cloud, run inspections, and even hand out fines if their systems aren't resilient enough. This is a massive, totally unprecedented expansion of power. Okay, next up, the gatehouse, the PSR. This was built to fight a really sneaky new type of fraud called authorized push payment fraud. This is where criminals don't hack your account, they trick you into sending them the money. They manipulate the person, not the password.
So how does this new rulebook actually protect you? Let's make it real. Imagine you're doing something you do all the time, like sending money to a friend or paying an invoice. You've got their account number, you type in their name.
But right before that money goes anywhere, the PSR forces your bank to run a new check called confirmation of payee. It automatically verifies if the name you typed actually matches the name on the account you're sending money to. If there's a mismatch, it warns you. This one single check is designed to kill an entire category of scams where you think you're paying a legitimate business, but the money is really going to a fraudster.
Now for the watchtowers. To fight money laundering, the EU realized that having 27 separate police forces just wasn't cutting it. So they created a single, central one, the new Anti-Money Laundering Authority, or AMLA. Think of it as a new federal sheriff, based in Frankfurt, who will directly supervise the 40 riskiest financial firms in all of Europe, including the big banks and crypto exchanges.
And that brings us to crypto. The new rules here are crystal clear. This quote really says it all. Any crypto company that wants a license to operate in the EU is now automatically subject to the exact same full-strength anti-money laundering rules as a regular bank. The era of crypto getting a free pass is officially over.
So just how strict are we talking?
Well, take the crypto travel rule. That's the one that forces firms to collect data on who's sending and receiving money. Most places only apply this rule above a certain amount, like $1,000. So what's the EU's minimum? This.
Yup, 0. The EU's crypto travel rule has no minimum. It applies to every single transaction, right from the very first cent. This immediately makes it one of the absolute strictest crypto regimes on the planet, all designed to make sure every single transfer that goes through an EU-licensed firm is traceable.
Okay, so these are massive, complicated regulations, but let's bring it all back down to earth. What does this digital fortress actually mean for you, for an ordinary person or a business in Europe?
Well, in the real world, it means your payments are safer, thanks to new checks that protect you from getting scammed. It means the whole system is stronger, because the banks and apps you depend on are now being stress-tested against major cyber attacks. If you're into crypto, it means the firms you use now have to get a license and actually follow consumer protection rules. And it means less fraud, because all these institutions can now share threat data in real time to stop attacks before they spread.
But the impact here doesn't just stop at Europe's borders. By building this fortress, the EU isn't just protecting itself, it might have just created a new global blueprint for everyone else. Because what's been built here is the world's first comprehensive, totally integrated rulebook for the digital finance era. It's a single, cohesive system that covers everything from cyber resilience to crypto assets, all under one legal roof. No other major economy has managed to do that yet. And that leaves us with a final, crucial question. The EU has built its digital fortress to try and tame this new financial world. The question now is, who's going to be next?